So obviously, I haven't presented in a week or so on the mining space, so very, very topical, as always, and a bit of a sell-off across the space at the moment. First starting with South32, we've taken it off our high conviction list, but I have to say it's still got extremely strong positive view on the company. It's just more around catalysts near term that can happen around the stock and really where we see conviction around buying the stock as opposed to just, more a tactical call rather than strategy around the actual investment view. So what's happening is that, and interestingly, is not being talked about widely by other brokers at the moment, is that in South Africa we've got proposed changes that could come into law for the South Africa's mining charter over the next coming week or two. So with that, there are a series of proposed changes, all of which are negative in terms of their potential money impact on any mining company operating in South Africa, especially for South32 South African coal assets. So I would have to say, though, countering that, is the fact that we value South32's South African coal assets at a combined 14 cents per share. So, potential impact of 20% or so to that valuation being the downside risk, that only equates to roughly 3 cents per share risk. So the actual materiality of that risk in damage to the company is only small. But with any change to a mining charter, obviously comes with a great uncertainty, especially given we won't immediately know the specific impacts of South32 if something big and nasty is announced by the government towards the sector. So that uncertainty could see a much stronger share price reaction in more of a 5 to 10% range that could obviously happen over the next week or two. So just with that in mind, the fact it isn't widely talked about across the market at the moment, and hopefully it doesn't happen, and hopefully all of the wide sweeping industry consultation the government's had waters down some of these changes, but it is a risk that we see being strong enough to take it off our high conviction list just for the time being. But with that said, I'm still happy with it as a buy. Yesterday they came out with those strong shareholder returns, an extra $500 million that they're planning to distribute to their shareholders over the coming year. Initially through a share buyback, there's something that was well flagged in their interim result in Feb. So that's very consistent as well with their strategy that they don't have any significant M&A on the radar at the moment, which we think the company is holding to. So good returns, good balance sheet, good cash flow performance, but maybe some short-term negative catalysts that could uncover a bit more value that you could get in at lower levels. Moving to BHP, RIO and Fortescue, also haven't discussed them in a little while to the network. We've been, since last October, November, we said that we were waiting for iron ore rally to start to moderate and for that to create a buy opportunity. Really hadn't happened until this month, and now it's obviously starting to get some serious traction. But with that, we're seeing share prices come back pretty strongly. So for us, BHP and RIO have drifted back into buy territory, and you would have seen I upgraded those last week, both of them back to an ad. Well, Fortescue for me, our target price is $6.33, so still trading around $6. And given its level of leverage, we just see that as still not being compelling value. So, we were very bullish on the sector when the market was pretty negative. Then we cooled when the market became quite bullish, and now we see potential for that to reverse again. So, for me, we'll wait and see what the iron ore price does. But any sort of wobble, given the strength we've had in the iron ore price, to me, it could uncover some pretty attractive bargain level entry points for BHP and RIO over the coming months. So, more than happy with people who have been buying them up until now. I think that they are back in buy territory. But let's wait and see what volatility unravels to see if we can get some really attractive levels. And just finally on Fortescue, I'd have to say that a lot of my competitors are pretty bullish on the stock, but I just think that with iron ore even in the 80s, you're making a really aggressive call buying it at these levels. I see more chance of iron ore reverting to $60 rather than going back to 95 sort of levels. So I just see that the risk being to the downside. And back in March, the spot valuation for the company was actually negative. So it's really important to understand that the amount of excessive leverage the stock does have to the iron ore price that I think has been a little bit watered down in the market commentary by other pundits who focus more on the positive momentum the iron ore price and the stock has had. So still a lot of downside risk for the stock, and I just much prefer people play it through BHP and RIO at this stage.